Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video for Monday, December 13th. It is just a little bit after market close here, 4:08 p.m. Eastern time to be exact. And in today's videos, we're going to discuss the broad weakness or the broad pullback, as you kind of see there under the what just happened. But we're also going to look under the hood, not only at individual stocks, we're going to look at some sectors and some other securities as well to kind of get a gauge for what's really been going on the last couple of weeks and where sentiment is, that type of thing, and put that in perspective with what we've seen over the course of this year. So before we get to that, as I always do, let's talk about what actually happened, right? What performance, what the market did today. So broad weakness, I mentioned that, growth hammered again. We've seen it pretty consistently over the last month. We've seen it a good bit throughout the course of this year, but many growth stocks getting hit pretty hard again today. You can see the G5 leading the way down relative to all the major 5 indices there, 1.75%, S&P down a little under 1%, Qs a little under 1.5%, Dow pretty much right there with the S&P down about 90 basis points for the day, mid caps down about 1%, and the Russell down about 1.5% as well. Russell continues to really struggle, mid caps dipping back below some key moving averages, which leads me to some changes we do have to the trend gauge. But quickly, before we talk about that, market state, no change. We're still in rally attempt. We did technically close below the 21 EMA on the Qs today at the very last second, but for the most part, we're right at or above the 21 EMA on the Qs, the S&P, and the Dow. So we're still in that rally attempt phase today. Not a great day, but we'll get to that in just a second. So market leaders remains the same here. It is neutral. We did see some leaders have some pretty bad breaks today. We're going to look at those. Some of those bigger liquid names that have held up better. But we do have a small change here on the short term. You can see this little yellow arrow has moved out a little more towards neutral than the bottom two here. And that's really because mid caps more or less rejected at the overhead 21 EMA today, back below it. Like I said, the Qs up until the last few minutes were above it. Now they're just right on it to a little bit below. S&P and Dow still above for the time being. Mid caps and small caps really a big hindrance or lag to the overall market for the time being. So before we get to what's under the hood, let's talk about Revere for just a quick second. If you have any questions about what I cover today, please feel free to send me an email. Happy to respond. Or if you're interested in what we do at Revere, you can email myself, Dan, Tim, Meryl, Alex, or Don at revereasset.com. So let's get into it. I think we've got some really good stuff today. We're going to start with the indices per usual, and we're going to get in here and look at some sectors as well as interest rates and things of that nature right after. So let's get into it. So SPY down about 1% today. That is actually probably not updating for you. Let's see if we can get it to pull the end of the day data. There we go. So down about 8% right to the 8-day exponential moving average. Nothing wrong with the S&P's chart as of now. You want to watch this 460 area was very important. If we come back to test that, you want to see that active support. Obviously, you want to see the 21 and the 8-day active support there on the S&P. But for all intents and purposes, although it's a down day, nothing wrong with the S&P's chart for the time being. DIA, pretty similar story, still above those major moving averages. You can see the 21, the 50, and the 8-day all pretty much converged at the same level here. Call it roughly 355 on DIA, right there below. That's the area you want to see if you get any support. Also kind of corresponds to the high of the gap up here on DIA. And QQQ, I mentioned a really poor close, you know, that obviously the other names or the other indices saw that as well, but the Qs were weak today, along with small caps and growth. So Qs closing just a teeny smidgen below the 21-day exponential moving average, but not by much. This is kind of important that it broke these last couple of days lows here around 393. That's not a great sign. There is this gap that could possibly be filled here. It's something to be mindful of, but right now on the 21, you want to see that active support. I've also got some highs right here from these 2 days around 390 to 392 that I'm watching for potential support there as well. But you want to see this quickly reclaim the 21 EMA, in my opinion. That's what a strong market does. Get quickly rights itself, gets back above those key moving averages to continue trending higher. That's what I'd like to see out of the Qs. Time will tell if we get it. And I mentioned small caps still struggling. Haven't undercut those previous lows around 213 from this time here in the beginning of December, but that's the next area I'm watching. If it doesn't quite make it there, then maybe it puts in a higher low. It can start to maybe right the ship, as they say, but right now it looks like it's headed to maybe take out these lows. Got within a couple of dollars of it today. And then mid caps, as I mentioned, pretty much rejected at this cluster of moving averages. This 500 level you want to see act as support. It did today to some degree, but mid caps now back below the 21 and the 50 actually today as well. So that's what the major indices look like. However, I do think there's something that's really interesting that I want to talk about here before I get into the actual charts of stocks, sectors, and so forth. So let's look at TLT here. So this is the Treasury Bond ETF. And I know the RS line kind of muddies this up here, but this starting here on about 1124 is when TLT made a big move up. We saw a big spike up in fear, and the indices and stocks began to pull back a little bit, particularly growth stocks, right? On 1124 was really when that stuff, a lot of that accelerated. You could even go back a week earlier. So TLT has made a strong move here. It pulled back, right, from basically the 6th of December to call it the 10th, right? And that's really when you saw the S&P, or you can look at the Qs here, bounce. So the 6th of December right here through the 10th. You've got TLT pulling back off the highs. You've got QQQ and some of the indices rallying back up. Now you've got TLT coming back up to the upside, and you've got the indices coming back in. So it's clear that over the last couple of weeks, we've seen TLT's price here going up has become a bad thing for growth stocks because it's now a safe haven. It's a fear trade where people are buying this out of fear and to have a safe place to put their money. Conversely, earlier this year, from pretty much this day here, 5/19/2021, to roughly the beginning of July, there was an extremely positive correlation between growth stocks and TLT's price. So IWO is the small cap growth ETF. We're going to look at 5/19 here on IWO right here. So from 283, call it, to the beginning of July, right here to 315. So TLT went up about 11% in that time frame. IWO also went up about 10%, 12, 13% or so. So a very positive correlation. Seeing TLT come back up, that means we saw, yields come back down. That was good for growth stocks in this time frame. Now we've seen the complete opposite. TLT going up has been bad. Like as you can see here, I mentioned that 1124, 1125 day. I said you could even go back a week further. You can see IWO peaking right around the beginning of November. But as TLT has started climbing back up, we've seen growth ETFs and growth stocks continue to move down. So we're seeing some of that defensive type of money flow into the larger, more liquid stocks, the ones that have more stable cash flows and don't have extreme valuations. And that's the point of what I wanted to show you there with TLT is this is now a safe haven trade. And we've seen these ETFs, the G5 names like ARKK, just not be able to catch a break and continuing the action to the downside. So let's look at some charts and let's look at what's actually having a great day today. And that is XLP, your consumer staples, really one of the most, if not the most defensive sector ETF there is, right there with utilities, who you guessed it, also had a great day today. So two of the most defensive risk off sectors actually breaking out and having extreme RS. You can see the RS line moving up pretty sharply, pretty much since that date that I mentioned right there, about the middle to beginning of November. So you've seen those defensive names gain headway. XLV is another great example. Healthcare. So utilities, healthcare, and staples really are the antithesis of the G5 index, and those have acted very well over the last month, call it, or several weeks. So I want to show you a couple of the stocks in here that are really big leading stocks. I mean, look at Costco relative to what we were just looking at with growth stocks or with IWO or ARKK. Look at NextEra Energy over the last 3 or 4 weeks, making an incredible move really since the beginning of November, going back to this again, riding the 21. This is a utilities company. And then United Healthcare, look at the sharpness of this move over the last 7, 8, 9 trading days. I mean, this is insane move to the upside for a company that's, you can see they do make sharp moves, but just really, really incredible relative strength when you compare it to the S&P here. So these defensive names have continued to show RS. That's a theme we continue to see. And then on the flip side of the equation, we've seen the less liquid, smaller, higher growth, less profitable names like Asana get absolutely decimated, down over 50% here, right? Hut, a Bitcoin miner, down 50% or more from the highs. A couple more here, Upstart, down now 70% nearly from its highs. So some of these super high multiple speculative, I mean, here's just some high flyers from last year, NanoX, these speculative companies, I mean, Butterfly, these SPACs, they've just been crushed. So you're seeing the money go to things that are stable, things that have cash flow, things that aren't stretched to extreme valuations and things of that sort. So with that being said, the big cap tech stocks were holding up really well and acting as, and still are, acting as kind of a money market to some degree. But we've seen some of those leaders crack. And I want to show you what I mean here. NVIDIA breaking below 300, back below the 21 EMA, almost breaking the lows of the gap down here. This is not a great look for one of the biggest stocks in the market and one of the biggest stocks for the Qs and the S&P, down 7% today. Tesla, similar story. We got stopped out of NVIDIA today in protection, sold it. And Tesla, kind of a similar situation here, was down 6% at one point today. If it breaks this 950 level, that's not good. So you're starting to see some of those big liquid leaders who were actually holding up okay, while some of the smaller names were getting hit hard, start to falter a little bit. And AMD is another good example here, similar to NVIDIA, very close to the 50-day moving average. So some of those big liquid names even starting to get hit now, but we still have SOX, the semiconductor ETF, looking relatively good, very close to all-time highs, and we've got the home builder ETF at kind of a similar story. It's on the 8-day exponential moving average. So it's a tough market to read, because if you you looked at growth stocks and you saw those charts, you really probably would not expect semiconductors to be at all-time highs, but that's the case. And those sectors, even today, something I noticed, getting hit a little bit. So the strongest sectors in the market taking a little bit of a hit today with the rest of the market. We've seen these hold up and be green on days where the market was down. Not the case today. So semiconductors and home builders, two of the leading sectors, taking a little bit of a hit today, along with everything else. Like I said, defensive was the name of the game today. A couple of more names here on the good side of things. Nucor up a little bit today, maintaining the 21. CIEN, I talked about this in Friday's video as well. Another really strong outing today, and a few more here. ANET, a holding in Grotection, acting well today, and QCOM also, although it didn't have the greatest candle, relative strength compared to a lot of other names today, still above those key moving averages, the 8 and the 21. That list continues to dwindle as we progress forward here. So let's get to some of the not so pretty. Roblox breaking the 21. We trimmed this. It's down to a very, very small position for us. AMBA was down 3, 4, 5% today, but we did buy this off the 21. A small position, albeit, but this is one of the leading stocks in the semi space along with MRBL. So we took a shot on AMBA. Obviously, the market kind of worsened and weakened as the day went on, really as we approach the close, but still above the 21 for the time being. Bitcoin continues to not really be able to catch a break, stuck below 50K. You can see GBTC kind of falling off a cliff here. Same story with Silvergate Capital, the bank that's heavily involved in cryptocurrency. Unity Software, although this ended up finishing okay today, was down 6-7% at one point, just continues to get taken to the woodshed. But for the a positive reversal today nonetheless on Unity. A couple of more here. RH was an earnings gap up last week, a big time gap down today. Failure, not a good looking chart here on RH. SoFi, a name that once upon a time was uptrending and looking okay, just absolutely crushed from 25 to 15 over the course of the last 3-4 weeks. A couple of more here. Home Depot, one of the leading stocks on the 21 over 21 list, but actually showing that it is susceptible to weakness today, down 2.5%, but still above the 21. And lastly, Jets, one of the worst performers today in the sector land. airlines taking it on the chin today. So I know that's a lot of information. And one last thing, I meant to cover this earlier and I didn't. So let me just highlight this really quick. The dollar continues to be in an uptrend, and we know that because the 21 and the 8-day are moving upwards and are in the correct order. So until that changes, we slice through and start moving lower. The dollar is still continuing to respect the 21 and operate in an uptrend. So UUP, TLT, I think we covered most everything today. Utilities, growth stocks, semiconductors, home builders. I hope you all enjoyed it. I'll see you on the podcast this weekend as well as the video this Thursday. So have a great week, everybody.